Welcome back to Money Mind Book Club, the channel where we explore timeless money principles, wealth wisdom, and books that change how you see money forever. Today, let's talk about a powerful idea that could transform your financial life. Money is a game of patience. The stock market is designed to transfer money from the active to the patient. Warren Buffett. Patience isn't just a virtue, it's the very heartbeat of wealth creation. When it comes to investing, time in the market beats timing the market almost every single time. The most successful investors don't obsess over the next hot trend or panic at every market dip. They know that patience is their greatest ally. I remember when I finally overcame the urge to chase quick profits. Instead, I started saving and investing consistently. Along the way, I noticed so many people trying to time the market, jumping in and out, chasing news headlines, and failing. Then I had a conversation with my friend Joe, an investor worth millions. Joe told me something that changed my perspective. A profitable investor doesn't time the market, they spend time in the market. That's the secret. Let time do the heavy lifting. Don't be in a hurry to make money. Let time work in your favor. The concept of delayed gratification is key. Just like the famous marshmallow experiment, where kids who patiently waited for a second marshmallow achieved greater success later in life, patience in investing often leads to far greater rewards. Instead of chasing quick returns or taking excessive risks, let compounding work its quiet magic. When you're patient, you're not only investing money, you're investing time. And time is the most valuable asset in wealth building. Many investors try to outsmart the market, buying when they think prices are low and selling when they think prices are high. But research shows this rarely works. Even experts can't consistently predict market moves. The better path? Stay invested, even when markets get rough. Over the long term, this strategy often wins. Okay, so let's look at two different investors. Investor A starts investing at age 25, puts in $5,000 a year for 10 years, and then just leaves that money alone to grow. Meanwhile, Investor B waits until age 35 to start, but keeps investing $5,000 every single year all the way until age 65. Now, here's the surprising part. Even though Investor A only invests for 10 years, they often end up with more money at retirement, just because their money had more time to compound. That really is the magic of starting early and, just being patient. Investor B invests for 30 years, but since they started later, their money has less time to grow. So let's talk about some practical steps to help you build patience. First, set realistic expectations. Understand that wealth building is really a long game. You need to think 10, 20, or even 30 years ahead. Stay the course because, markets will go up and down, but history shows they tend to recover. Staying invested really matters. Another helpful tip: automate your investments. Regular automatic contributions help remove emotion and keep you disciplined. Ask yourself, am I willing to remain patient with my investments, even when markets get scary? And do I have systems that help me stay consistent and focused on the long term? Remember, building wealth isn't about speed. It's about discipline, patience, and the silent power of compounding over time. Those who play the long game, they win. Thanks for listening to today's episode on Money Mind Book Club. If you found this valuable, don't forget to like, share, and subscribe. And remember, real wealth isn't built overnight. It's built over time with patience. Until next time, keep learning, keep investing, and keep your money mindset strong.